Rebalancing is treated like a good habit, but here's the uncomfortable truth. It can quietly hurt you. Because rebalancing isn't a free lunch. It's a trade. You pay a certain cost, taxes, spreads, turnover to buy an uncertain benefit. And if you do it the wrong way, you can end up selling your winners, triggering tax bills, and grinding down compounding. Rebalancing solves one real problem: drift. Over time, your portfolio drifts away from your target mix, and that's not just allocation drift, it's risk drift. A 60-40th that becomes 70-30th is a different system, whether you admit it or not. Here's the twist. Drift isn't automatically bad. What's bad is not noticing you've quietly switched systems and still thinking you're the same investor with the same plan. Most people talk about rebalancing like it's return optimization. It isn't. At its best, rebalancing is risk control and, honestly, emotion control. It's there to stop your portfolio from becoming something you can't hold. But every rebalance has trade-offs. You can reduce exposure to your best-performing assets, you can trigger taxable events, and you can even clash with tax strategies like harvesting losses. So, the question isn't, should I rebalance? It's, what am I paying and what am I buying? Here's hidden risk number 1. Friction compounds. Frequency goes up, gives turnover goes up, gives friction goes up, gives compounding, gets sanded down. People obsess over expense ratios. 3 basis points, 5 basis points, while ignoring the stuff that doesn't show up as a clean line item. Index construction and rebalancing rules can create hidden costs that are meaningfully larger than the fee you're staring at. And the more often you rebalance just because it's time, the more you convert market noise into real costs. Hidden risk number 2. You think you're maintaining allocation, but you may be locking in a worldview. A fixed rule assumes the world behaves within a familiar range. Correlations, inflation regimes, rate environments. But the world changes. If your rule never updates, you can end up repeatedly forcing trades that made sense in an old regime, while the actual drivers of risk have shifted underneath you. Sometimes discipline is just rigidity with a nice label. Hidden risk number 3 is the one most investors miss. The same action can flip meaning depending on your life cycle. Accumulation is one game. You're adding money, volatility is tolerable, time is your friend. Decumulation is a different game. You're withdrawing, cash flow matters, and bad timing can become permanent. In that withdrawal stage, rebalancing can feel like you're settling short-term volatility into permanent loss because you're selling to fund life, not just to tidy a spreadsheet. Same rule, different phase, different damage. So, what do you do if rebalancing has real costs? You rebalance smarter. 3 ways. First, new money first. Root dividends, interest, and new contributions into what's underweight, so you rebalance with less selling. Vanguard highlights cash flow rebalancing as a practical approach. Second, threshold bands, not calendar triggers. Set a tolerance range. If nothing meaningful drifted, you do nothing. Third, tax-aware first, percentage second, especially in taxable accounts, because rebalancing can create taxes and collide with loss harvesting. On this channel, I break down market mechanics and risk rules, no hype. If this saved you one unnecessary rebalance, hit like and subscribe for one practical rule each week. Imagine this. Stocks run for a while. Your allocation drifts. And because you're disciplined, you keep selling the winner to rebalance. You feel proud, rules are rules. But you've triggered tax events, increased turnover, and repeatedly reduced exposure to the asset doing the heavy lifting. Your net worth still grows, but the curve starts to feel dull. Now compare that to a smarter system. New money first, plus threshold bands. Fewer trades, fewer tax surprises. Less mental load. Same principle, risk control, just with less self-inflicted friction. Before you rebalance, run this checklist. 1. Am I in accumulation or decumulation right now? 2. Will this rebalance trigger taxes or friction I don't need? 3. Am I using rules to reduce stress, or to lock in a worldview that no longer fits? If you can answer those three, your rebalancing gets cleaner and cheaper.